IRMAA stands for Income Related Monthly Adjustment Amount, and it's a surcharge that some people pay for their Medicare Part B and Part D, but for many of us, you can avoid having to pay this surcharge by careful and intentional proactive planning. How do you need to be planning ahead for IRMAA in 2026? I've got 3 strategies need to be on your radar. That and more coming up. Sometimes when you pay more, you get more, right? And that makes it simple, right? Something costs more, but you're going to get more. Okay, that makes sense. Sometimes you can go value hunting where you're actually paying less, but you get more. And there's some examples of that. But then there's luxury items where you pay a lot more or you pay more, but you're really getting the same thing. You might feel better about it if it's a brand that you like and you feel more confident, but it's really the same thing. You're paying more, but you're getting the same thing. Here's the bad news, guys. Medicare Part B and Part D specifically, that is not a luxury item. We're not it's great benefits, right? But it is not a luxury item. And yet, many people have to pay more, and get the same thing. I want you to avoid that. This is this surcharge where you have to pay more for Medicare Part B and Part D, even though you're just getting the same thing. You don't get to cut in line. You don't get to schedule your surgery before others, but you are paying more, and sometimes double or even triple the cost. Guys, this is called IRMAA, or Income Related Monthly Adjustment Amount. And what it is your Medicare Part B and Part D is based off of your modified adjusted gross income from the prior year for 2 years from 2 years ago. And so the reason is when at the beginning of the year, that's the most recent tax return that's completed and filed, okay? And so that's why it's the prior year. But it's based off of your modified adjusted gross income. So therefore your taxes, you're gonna pay above and beyond the base rate for your Medicare Part B, which right now is $202.90 per person, or the base rate for the Medicare Part D plan that you pick, which there's no base, for all plans. You pick a plan and then the IRMAA surcharge is above and beyond that. Your IRMAA does not last forever. It just means it's going to last for that year. There is an appeal process, but it doesn't work the way that you think, and I haven't seen it kind of universally applied. I've seen the same situation. One gets appealed, and yep, you're fine and approved. The other one, same situation, nope, denied. You got to pay IRMAA for the next 12 months. Well, who's subject to IRMAA right now in 2026? It's individuals that in 2024, right? Because that's the prior year. It's individuals that had modified adjusted gross income above $109,000 or joint filers above $218,000. And you can see if it's above, but you're in that next year, instead of paying $202.90, you're paying $284.10. If it's in the tier after that, then you're paying double the amount. If it's in the tier after that, then you're paying more. I mean, look at these tiers, right? You could be paying double, if not triple, for your Medicare and still getting the same thing. But that's those that are paying IRMAA today. Based on your 2024 tax return, that ship has sailed, okay? The IRMAA that you may have to pay next year, you'll get those letters in typically November, maybe early December, as to whether you're going to be subject to IRMAA for next year. That's going to be based off of your 2025 return. And that's the return that you just did a couple months ago. So you're going to want to tune into that. But that basically ship has sailed unless you haven't filed yet and you are doing a SEP IRA contribution, something like that, to lower your modified adjusted gross income. But for most people, that ship has sailed. And maybe you own a business, you can do some deductions and manage that a little bit. But for many people, that ship has sailed as well. So the planning that you're doing right now, the tax planning for 2026, is going to impact your IRMAA, if you're on Medicare, that your IRMAA in 2028. So what do you need to be aware of when you're planning for IRMAA or planning for your taxes this year in 2026 from an IRMAA perspective? Number one, and this is the biggest question that I get around IRMAA, other than what do I need to do to appeal this thing? And that is, well, if we're planning right now in 2026, but it's not going to, I'm not going to realize the IRMAA until 2028. Well, what are these income bands for 2028? We don't know. They're not published. Therefore, well, how do I plan? I would plan right now. This is takeaway number one. I would plan for your IRMAA based off of these 2026 numbers. So 109 and 218. And you might say, wait, why? I mean, hasn't it been growing? Yeah, these thresholds are not static. They increase with inflation, and they've been averaging about a 5% increase a year. So wait a second. Doesn't that mean I should assume another 5%, another 5% increase? Therefore, when I do my tax plan in 2026 for my 2028 IRMAA, I should be looking at numbers higher than this. I'm saying it's not worth it. It's not worth it. I would assume these numbers stay the same. There's very little growth on this, and I wouldn't be too aggressive. Why? Because $1 over puts you in the next threshold. $1 over means you're paying an extra $1,000 a year or whatever the number is. Well, certainly there hasn't been a time where the numbers didn't go up. Yep, there actually was. It didn't go up, right, for a while. That was the time period right before the previous 5 years. And so I would just assume I wouldn't be too aggressive. I would plan off of these exact numbers being the IRMAA thresholds for 2028. Second, I would make sure that you're not just planning for IRMAA, but you're also planning for the new senior deduction. That's right. If you've got a plan around IRMAA, that means that you're over age 65, you're on Medicare, right? And so that's the individuals, that's the grouping that care about IRMAA. And if you're listening to this and you're like, well, that's not me, do I need to listen to this? You need to, because the decisions you make today and the planning that you're doing right now is going to make planning for IRMAA easier or more difficult. So be aware right now, there's a new senior deduction, their term, not mine, that applies to individuals that are age 65 or older, but their income's below certain thresholds. So again, it's the same group that care about IRMAA, you're age 65 or older. So therefore, be aware of the new senior deduction. If you're age 65 or older and your income's below 150,000 joint or 75,000 single, then you get a $6,000 deduction per person. So if it's joint, then you could each get a $6,000 deduction. That's $12,000. That's a big deal. The problem is those thresholds, that's 150, that's 75,000 and 150. Well, that's way below 109 and 218, right? So if your planning is, I want to do conversions, or I want to capture or realize capital gains, or I need to sell an asset and get some cash because we're doing a home remodel, or we want to buy a new vehicle, something like that, so I can realize some gains up to this level. Just know you might go all the way up to that IRMAA threshold, but you might blow past this threshold for the senior deduction and get a much smaller deduction than you otherwise would have. That may make sense. I just would want you to do that with awareness, because the senior deduction is only around for 4 years and we've already passed one of them. They could extend it, we don't know, but it's around for tax year 25, 26, 27, and 28. That's it. And if you want to get it while you can, be aware that is at odds with your IRMAA planning. And then planning strategy number 3, qualified charitable distributions have an enormous impact. These are QCDs. And yeah, if you're 65, but you're not yet 70 and a half, then you might be bummed out when I tell you that qualified charitable distributions are only eligible once you turn 70 and a half. But here's what happens is you can take money directly out of your IRA and send it to a 501c3, a charity, without it landing on your tax return, meaning when you do that, it doesn't increase your modified adjusted gross income. And you might say, well, what's the big deal? Why do I want to take more money out? No. Even if you're not taking more money out, right now, if you've got your Social Security and you're supplementing that with withdrawals from your IRA, but you're also giving to the church every week or every month, or a 501c3 that you care about, technically that Social Security and your IRA, that's coming into your cash flow, and then out of that cash flow, you're giving to charities. Okay, fine. Well, what if instead of having that charity coming out of your cash flow, you took that charity contribution or donation and sent it directly from your IRA directly to the charity, right? And then you could lower the amount that you're withdrawing from your IRA such that your cash flow is still the exact same, because you're no longer giving to church out of your cash flow or giving to the charity out of your cash flow. And what that means is you have less taxable income. You've still donated to the causes you care about the exact same amount, but you have less taxable income and therefore more planning opportunities to avoid and get around IRMAA. Trick is, you've got to be age 70 and a half or older before you do this, and the money needs to go directly from your IRA, not 401k, not other account, from your IRA directly to the qualified charity. All right, those are 3 ways that you need to be planning ahead for IRMAA right now in 2026. And there's a lot more strategies like that. All of this fits within your tax planning, but yes, also in your protection planning, because that's where your health insurance is housed, and cash flow planning as well, retirement planning, investment planning. This takes a look at all 6 areas of your financial life. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.